Hello friends, welcome you all to the next lecture of the JC eConnect series of online lectures. We are into module 4. This will be a concept lecture and the concept which we will be discussing today is working capital. In previous lecture we have discussed about balance sheets and its components etc. Today's topic of discussion will be working capital. So let's start with the introduction. Working capital. Working capital means the firm's holding or current or short-term assets such as cash, receivables, inventory and marketable securities. These items are also referred to as circulating capital or short-term capital. Corporate executives devote a considerable amount of attention and time to manage working capital. So now let's study what is working capital. In brief, working capital is that capital which is required for continuing the day-to-day activities of a firm smoothly. Okay, without working capital you cannot go ahead with the day-to-day activities of any firm smoothly. Working capital is a part of your current assets which we have studied in the previous lecture and becomes a very important aspect for maintaining the smooth functioning of any organization. So now let me take a simple example of working capital. One example I will take generalized example. One example we will try and discuss related to an civil industry. So for example, I will take a student who is staying in a hostel room and I will be analyzing the working capital of that student for a day. He travels from his hostel to the college, say by private transport, for which he has to spend 15 rupees. Further, he has breakfast and tea in the morning, for which he has to spend say between 30 to 50 rupees. Further, again he has a cup of tea in the midday, say 5 to 10 rupees. Then he goes for a lunch, 50 to 70 rupees again. Evening he goes back to his room, again picking up a private transport where he again spends 15 to 20 rupees. Further, he has his evening snacks and ends the day with the dinner, spending another 50 to 70 rupees for it. So this is the minimum or say a generalized calculation. So we can say that total amount comes up to be about 300 rupees. Means if the student has to spend a day properly, reach the college, have his stomach full at the required time, minimum he has to have 300 rupees with him for the day. Now what is 300? 300 becomes a sort of working capital. Okay, are you getting my point? So working capital is that amount which is required for smooth functioning of the day-to-day activities of a firm or an establishment. One more example, if I am a practicing civil engineer, I have my own office setup which I have rented. Okay, I have taken an office on rent where I have 4 systems and I have employed 3 people for working in the office and 1 person for taking care of the site. Now, if I take a month, what will be my working expenses? Firstly, the rent of the office, then comes the electricity bill, then comes the salaries which I have to pay, then comes the other expenses such as snacks or teas which are ordered during the afternoon session, or if any guest come for them if something is ordered. So these all amount for the month comes in as an working capital. Means this is that amount which is required to conduct my day-to-day activities. Now further going, if I require some maintenance work of my computer systems or if I want upgrading of the softwares which I am using, those add up on the existing working capital. Now these things further in our discussion under which category they fall we will be discussing. So I think by these 2 examples we have understood what is the working capital. So in civil industry working capital becomes very, very important. Now, if you take the side of Karnataka or say various parts where generally the laborers are paid on weekly basis, means if you are concerned about the labor payment, your working capital becomes a working capital for 1 week, because on every Saturday you have to make the payment. For example, if you have 20 laborers distributed in different categories as head mason, masons, bistis, coolies, etc., and each of them have their payment. So what should be your target is, on Saturday you should have a capital which will be able to satisfy their weekly salaries. Hence that becomes the working capital. So calculating the working capital requirement is a basic necessity for all the industry, and it plays a very important role in civil industry, because working capital for civil industry varies from time to time, varies from function to function, or say from task to task. So these all parameters have to be analyzed, and working capital has to be properly estimated by an civil engineer. Now, this is also referred to as what? Circulating capital, because this money is moving. Money is not waiting at a point, it is circulating. Or short term capital. Short term capital means it is that capital which is required to fulfill your short term requirement. So your working capital is also called as short term capital. Now, working capital management is a big concept. Even if it is termed as short term capital, the management concept is very big, and many industries focus on working capital management specifically. Okay, so now for example, you can take an assignment. How working capital has been affected because of this lockdown due to COVID-19. Now, if we take an example of a site which was ongoing and the work has stopped, and as our labor payments are based on the work carried out weekly, the payments will not be made as work is not executed, because they are daily wages labor who are the most affected. Hence the working capital requirement was very low. Where the working capital requirement was there is only might be the salaries had to be paid to the watchman who is there on the site taking care of the materials. Hence during this lockdown, even if the construction industry has stopped working, it has affected working capital. The working capital has come down because you need not pay the salaries of the laborers who are on daily wages basis. Okay, so actually we have to give one part on the basis of humanity, but as per your calculation, your working capital goes down. The consumption of electricity has gone down, the consumption of water has gone down. Okay, means the working capital has gone down in this lockdown period. So this is one small analysis. So similarly, what can happen when the construction sector opens, and it is that by June, July will start, rainy season will start. So now what will happen is people will rush ahead with the work. They might increase the number of hours of work, they might put in more laborers so that their construction activities are completed before the heavy rains start. Now what will happen in that period with respect to working capital? Automatically your working capital will go up as the number of laborers you are employing is more, the time duration for which they are working is more, electricity consumption will be higher, water requirement will be higher. Now this is how, with a small example, I have told you about the working capital. When you think of this on a larger scale, the picture is too big to be analyzed. So you who can be the future construction managers have to understand this concept of working capital very much properly. Now, next concept is very nice and very important, working capital cycle or operating cycle. This is a generalized cycle which you can apply to any industry, of course including the civil industry. So first parameter is cash. By using cash we go for the purchase of raw materials, then the work starts. we get the finished goods, then we have to sell the goods, we get the accounts receivable, and again the cycle continues. So it is a cycle which basically is governed by these 6 parameters. So when we take an example of a civil industry, the raw materials is nothing but our construction materials which you will purchase. The work will start where laborers and other machineries and all come into picture. The work will get over, that is the building is constructed. Further we will go for selling of that building, or if we have taken a contract, we will hand over that building to the owner and we will get the money, which is termed as accounts receivable, and again the cycle starts for next project. Or if we are dealing with a big apartment project, this cycle can be framed level wise or say floor wise. So understanding of working capital cycle is very important. Each and every step of this working capital cycle is important as it affects both cost as well as time. So if you delay the purchase of raw materials, automatically your work will stop. Your work will stop, laborers are there on the site without any work, you have to pay them. As work is slow, the construction activities will become slow and your finished product, that is the building, okay, or any other apartment or anything what you are constructing, that construction delay will occur. If the delay occurs, handover process gets delayed, and as the handover process gets delayed, the account receivable, okay, which you have to get also will be delayed. And as per the concept of time value of money, the late you are getting your money, that means you are losing your money. Okay, amount remains same, but when we apply the concept of time value of money, if your payments are delayed, in short, your profit is reduced. So a working capital cycle is very important. So as an assignment, what I want you all to do is, in detail for construction of say from plinth level up to first slab level, with the different activities which you will be studying in your MSP lab also, try to frame an working capital cycle. So when we say raw materials, list the materials which you will be getting. When we say work in progress, list the works which all will be happening. Okay, so like that, as an assignment, I want you all to do one working capital cycle for one floor to another floor construction. This also plays a very important role in manufacturing industry, where again the cycle remains the same, but materials and application changes. So this is what is a working capital cycle, or it is also termed as operating cycle. The more longer the cycle, you will get the accounts receivable later. Okay, so short and sweet cycles are always helpful. This concept is also used in subcontracting. For example, if you have a big work which you can divide in 4 different parts, and you are okay or you are capable of handling all the 4 units. But what happens is, if you alone are handling all the 4 units, your working capital cycle gets interlinked and it becomes longer. So in such cases, what you can do is, 2 works you can give to a subcontractor and 2 works you can do it on your own. By giving those 2 works to a subcontractor, what you are doing, you are reducing your working capital cycle. Okay, because you have outsourced. Your profit percentage might be a bit less, but you are having a proper control over your working capital. You might see this whenever a big contractor or a road contractor, a major company, takes a road work, it gives piece contracts. Okay, it breaks the entire work into small piece works and outsources it. It is also one of the technique to manage the working capital. Otherwise, if you take the entire contract, your short-term assets have to be very strong, so that you are able to manage the working capital cycle. Hopefully the concept of working capital cycle is clear, and I hope that what assignment I have told, you will do it. If you have anything to discuss, you can discuss with me. Now, most important concept here is the factors which determine the working capital or factors which impact the working capital. I have broadly divided them into 4 categories. Each category has 2 factors. Let's discuss them. So, first factor I have taken it as industry demand and nature of industry. Now, let us discuss industry demand. For example, now all the civil engineering works were halted for more than a month, say in fact 2 months. So, now what has happened is the demand of products or materials was less, but now with the pickup of the construction industry, what will happen? The demand will increase. Okay, so when the demand was less, for example, the cement manufacturing plant reduced the manufacturing of the cement as the demand was less in the market because hardly any construction activity was taking place. So at that time what happened is their working capital went down. Whereas now when the demand increases, proportionally they have to increase their production also. Okay, proportionally the production also has to be increased, and once you want to increase the production, you want more raw materials, more labor force, more working hours, more consumption of electricity and water, hence automatically your working capital shoots up. This is what is industry demand. Now next is nature of the industry. Now nature of the industry many times can be governed by the seasons. For example, if I take a generalized example of a factory or an industry manufacturing rainy wear or winter wear, just before the start of the rainy season, that is this month's, that is March, April, May, the production rate will go up because the product has to come in the market before the rainy season starts. That is by mid-May or May end, the product has to come in the market because it will be sold in the month of June, July and August majorly. So before that the working capital increases because the production rate has increased. Once this season gets over, automatically the manufacturing is lowered or stopped also. In that case your working capital goes down. Next, for example, if we take a sugar industry, okay, sugar manufacturing industry or sugar plant, there during the season where you have more work, they employ temporary laborers. Hundreds of temporary laborers are employed during that period because the main work is very heavy, it runs 24 hours and the labor requirement is more. So in particularly that season where production is also more, their working capital is also on the higher side. Now in such situations, if you don't maintain the proper working capital, but you have to run the industry with a higher workforce, you have to go for taking loans. That's where your financial crisis starts. So as an project manager, managing the industry demand and understanding the nature of industry becomes very, very important. Next is production cycle and sales. Now production, marketing and sales go hand in hand. Production cycle, that is from the raw material stage to the finished product stage, what time is your cycle taking is termed as the production cycle. Now if I take a residential building, a 30 by 40 plot or a 40 by 60 plot, I want to construct a simple G+1 residential building. So in these situations, or say in these conditions of our 2-tier cities like Belgaum, Hubli, Dharwad, Bijapur, Bagalkot, etc., we generally expect the work to get completed in 15 to 18 months. So once the work is started, we expect the work to get over in 15 months, but generally it goes up to 18 months. If you have strict supervision and if you are monitoring, if you are managing the engineer and the workforce properly, you can complete that task in 12 months. But if you use project management tools and techniques, a G+1 construction can be easily completed within 1 year. But we are not aware of these techniques and we are not worried about the working capital. Longer is our cycle, more will be our working capital, but we are unaware of the concept of working capital, and that's where you as construction managers will play an important role. The production cycle, okay, the production cycle, you lower the production cycle time, your working capital automatically reduces, profits increase. Sales. Now sales is a very important factor these days. For example, if a company launches a new mobile phone, okay, and it has given a very good quality of all the things, requirements are satisfied, but if they don't advertise, okay, if the advertisement of the new product is not done, very few people will come to know about the new product, hence automatically its sales will lower, and if sales are lowered, their profits or the accounts receivable are lowered. Hence sales and marketing becomes a very important and effective concept in determining working capital. If your sales are higher, produced goods are sold, you can recover the money and your working capital goes smoothly. But if your production is high, sales are low, you will not get the receivables, and from your assets you have to convert them into working capital, which is not preferred. Hence production cycle and sales are very important factors which determine the working capital. Next comes the current asset requirements and credit control. These two are important with respect to civil industry. Current asset requirements means in our civil industry we come across different tasks at different time. Say excavation is a different task, slab or concreting is a different task, finishing is a different task. For each task your current asset requirements vary, that is the working capital varies. Hence you should have a clear idea with respect to each activity and task, how many number of laborers you require, what material you require. You have to purchase that labor looking at the market. If you have an idea of the market, if the rates are going to go on the higher side, it is preferred that you purchase and stock the materials instead of buying those materials or goods at a higher rate. Okay, so current asset requirements. And what is credit control? Credit is nothing but udhari in your terms. Okay, in general terms it is udhari, or the delay in payment is nothing but credit. So we can use a credit option in both positive way in the civil industry, as well as sometimes the credit option hits the civil industry. In a sense, now if you are purchasing the materials from a fixed dealer, you purchase say 500 bags of cement and you make half payment. Half payment remains there as a credit on your account which you have to pay him. So as you have paid half the amount only, your working capital has reduced. Okay, your working capital requirement has reduced because you have not made the full payment. So that is how you can use the credit to lower the working capital requirement. Further, during the next purchase you have to pay this, but at that time your working capital should be there to satisfy this requirement. So that again comes in managing the working capital. So on the other hand, the contractor completes his work, but either from government authorities or if it's a private contract from the owner, he is not able to recover his money fast. It is in a sense credit, means you owe the owner owes the money to you but he is not giving. Okay, it's a pending account. In that cases it hits the civil industry. So credit during purchasing of the materials, if used wisely by the civil engineer in charge, it can lower the working capital, in the sense he can make more profit. The last parameter to be discussed is inflation or price level change and change in technology. So now price level change is a very important parameter. In between there was a time where cement industry had faced a lot of trouble and cement was sold in black market, where the cost of the cement generally was 350 rupees. Cement bags were sold at 425 to 450 rupees. Okay, now this was unexpected. Your estimation doesn't account for it. So in such scenarios, you cannot stop the work as cement is not available at a cheaper rate. You have to purchase the cement at the available rate. Your working capital shoots up. Okay, your working capital shoots up. Now also, after this COVID-19 lockdowns, the steel and cement rates have gone higher. For example, if I say that I have to cast a slab, and unfortunately before the lockdowns I could not cast the slab, and now I'll be going ahead with the procedure of casting the slab. My cement requirement is 1000 bags, and say per bag, if the cement rate has increased by 25 rupees, so I am purchasing 1000 bag, means already my working capital has increased by 25,000. Similarly, say I require 1 ton of steel, and again the cost has shooted up there. Okay, so that also adds up to your working capital. The laborers who were unemployed for 2 months, they might say that before we were charging say 25,000 for completing this much of work, but now as we did not have any income for past 2 months, we have increased our charges to 30 or 35,000. So in that case, again that excess of 5-10,000 adds up to your working capital. So after such breaks, unforced, unseen breaks, once we go back to work, working capital management becomes an extremely important factor or parameter which has to be considered. Otherwise, again your work will get affected. So civil industry at the present moment will face this criteria, that is inflation or price level changes. Next is change in technology. Overall, on a broad way, this parameter does not impact civil industry, but it is more important in electronic industry because technology is changing day by day. In civil industry, we have something called as software upgradations, okay, or say high tech machineries which we have, okay, their working is changing, or a new technology has come in the market. We have to go for the purchase of those equipments which are using the new latest technology, which makes our work more efficient. In that case, change in technology becomes an important factor to be considered for civil engineering. So we have discussed these 4 parameters and 8 factors. With the explanation, I hope that you all are able to make the notes at a PG level. Don't expect notes like school level. With this explanation, I expect that you all make the proper notes on these things which we have discussed. We will continue with this working capital in the further lecture also. Thank you.